How to pick the right life insurance plan. Recently, I got quite a bit of inquiries asking about life insurance. They understand insurance is important in their financial plans, but they are just not too sure where to start. So in this video, I want to talk about 4 simple steps that you can pick the right insurance plan so you will never have a buyer's remorse. Hey, welcome back. This is Thomas, here to help Canadians to make better choices on retirement, wealth, and insurance. My goal is to make sure you can take 1 or 2 ideas home and start making better financial decisions today. If you find this video valuable, consider subscribing so you will never miss any of my videos. Let's jump into it.
In Canada, there are tons of insurance choices. First, there's life insurance, health insurance, disability insurance, and so much more. And when you look closer at each one, you'll soon find out that there are 100 different options for life insurance alone. With so many variations to choose from, it's hard to tell what you really need. And there are more questions you need to answer before you pick the right insurance. For example, how much coverage do you need? Should you go for term or permanent? How can you know if the type of insurance is good for you? Or how much should you expect in terms of payment? All the things to consider can make you want to just run away and not pick any insurance at all. But to make your life easier, I want to share my 4 easy filters that help you choose the right insurance. Similar to diamonds, I have my own 4C methods to choose the right insurance plan, and it stands for coverage, cash flow, customization, and carriers. These are the 4 things you need to consider when picking the right insurance, and I will explain them in greater details now. Okay, let's go to the first C. When choosing an insurance plan, the first question you want to ask yourself is, what is the purpose of this insurance? Usually, there are 4 problems that insurance can help. 1. To cover debts. 2. To continue the existing lifestyle expense. 3. To provide additional tax shelter vehicle. And 4. To move assets much more efficiently. Once we decide what problems to tackle, then we need to ask ourselves, what coverage should I get then? And here's how I usually calculate the coverage for the insurance need. When it comes to life insurance, there are 2 ways to calculate your coverage. 1. You can calculate all your debts such as mortgage, loan, and final expense. Also, how much you'd like to provide for your family in case something happens to you. The right amount of insurance should be enough to cover the debts and the future income power. This way is more accurate, but there are lots of moving parts, so it might take a longer time to calculate. Another way to calculate your needed life insurance coverage is to take your income and times it by 10 to 20. The reason behind it, because usually the mortgage is 6 times your income already, so the remaining 4 times to 10 should be able to cover the other debts. Say if you make $100,000 a year, then I will recommend at least $1 million of life insurance coverage. But again, just like drinking water, it's recommended 7 to 8 glasses per day, but each individual will be slightly different. Okay, how about health insurance? When it comes to sickness insurance, or what we call the critical illness insurance, I usually recommend 3 to 5 times your income. The reason for that is that you want your insurance to cover as much as possible. Imagine, for example, if you suffer from cancer or heart attack, there is no way for you to go back for work soon, so you need to be financially protected for at least 3 to 5 years without worrying about the money. But Thomas, what if I'm a housewife with no income? Then I'll suggest use your husband's income as a reference. Let's knock on wood, when you're sick, your husband needs to take time off too to take care of you, so he needs a plan to provide financial support. For sure, we don't hope that you get so sick that you cannot work anymore, but that's exactly what insurance is for, to be protected in case anything happens. Now, I also want to share how you can calculate the coverage for disability insurance. This one is different from life and sickness insurance, where if you buy 2 life insurance, then you can get double the coverage. Disability insurance is a direct income replacement insurance. The maximum you can get is usually between 65 to 80% of your full income, so there's a glass ceiling of how much benefit you can receive. Okay, once the coverage is settled, it's time to look at the second C. The cash flow deals with the budget you should set aside for your insurance. I always recommend it using no more than 10% of your income for all the insurance plans. my philosophy is always using the 10% to cover the remaining 90% of your income and assets. And here's what I mean. Let's say Company A offers you a job for $100,000. The numbers sounds amazing, but they have no benefit for you. That means if you're sick or disabled, they won't pay you. If you pass away, the company won't handle your debts. And when you retire, they have no pension plan for you. Versus Company B, they could offer you to pay you $90,000 only. However, they pay you when you're sick and disabled. They give you a pension plan when you retire. And also, they will pay your family a lump sum of money if you passes away. Now, what job you're interested in? So how do you compare the insurance quotes? There's a possibility to use websites to compare different quotes, but keep in mind that normally those quotes are just a reference. This gets me to the point why I never recommend buying insurance strictly online. Some people felt drawn to buy insurance online because it's fast and it seems like you can choose exactly what you need. But what these people don't understand is that insurance is not a product. It requires a plan. It has a lot of moving parts. It's not like buying a house or a car where you have a set price and a set return. Insurance is more complicated than that, and that's why it's so hard for many of us. This gets me right to the third C. Oh, and before that, if you have an existing insurance plan that you're not too sure if it's the right fit for you, feel free to connect with us. We can do a policy review with you for free. There should be a link below in the comment section, and I'll see you in there. The next C has to do with how flexible you want your insurance to be. Points I recommend to look at are, do you want this insurance plan to cover you temporarily or for the entire life? Term insurance means that your insurance runs for a set amount of years, for example, 30 years. Your premium is very affordable. However, once the 30 years is over, the premium will go up more than 300%. Permanent is the opposite. It covers you for the entire life, but the premium will be higher. Also, most of the insurance plan is pay-as-you-go plan. As long as you pay, you get covered. However, there are plans that can be limited pay, meaning you can pay the entire permanent plan in 10, 15, or 20 years, like buying a place, so you know exactly how much you're paying into this plan. Also, there are riders, meaning you can add different benefits on top. For example, there are options where you can get all your money back if there's no claim involved. Or if you're in disability, then you don't have to pay the premium. There are at least 30 riders that you can choose from, and there's a lot to consider. This is very different from carriers to carriers, and it can be a bit confusing because it's not always transparent, which gets us to the last C. When choosing insurance, it also matters which company or carrier you pick because different companies focus on different things. For example, some companies focus on doing whole life insurance. They give out better dividends. Some focus on term insurance, and some focus on the professional markets like doctors or dentists, and some focus on family or young individuals. And lastly, some might focus on rejected cases. Even you get declined by other insurance companies before, some can provide guaranteed acceptance, which is quite unique in the market. So when you choose any insurance plan, remember the 4C: coverage, cash flow, customization, and carriers. Remember, insurance is a solution, not a product, and I suggest at least talk to a professional first. Because for the coverage and cash flow, you can find it out on your own. But for customization and carrier, you need an advisor's help. Hey, if you're interested, I can make a video on how to choose the right insurance agent too. Just let me know in the comment below. Alright, thanks for watching. This is Thomas, and I will see you in the next video.